Hello, everyone. Welcome to our webinar on mastering transactions and the essential practices to do with short-term rentals. So today, if you've not been to many of our sessions before, this is part of a larger um, session or webinar series that we've been doing with Trust Synthesis for the past few months. Today, we're going to be focusing in on the transaction aspects of the short-term rentals. So some basic stuff around bookkeeping, reconciliation, and how clearing can help. We did get a lot of feedback from the last sessions around actually reconciliation in general and wanting to learn more about reconciliation. So we'll certainly touch on that. I'm just going to make sure that I go into the full screen mode here. Command F, Control F. Oh, sorry, just give me a moment. There we go. And so yeah, back to kind of the background on these sessions. So it's part of a webinar series we've been doing with Trust Synthesis, where basically we've been going through different topics within clearing related to short-term rentals, and really trust accounting in the short-term rental space. So I did provide another welcome package. We provided this each session. It's in the webinar chat. I did send it to everyone. So it should be there. If you can't find it, let me know. But basically, this is going to be a place for you to generate your own notes. It's a little bit of like a breakdown of all the stuff we're talking about today, with also sections where you'll be able to add all of your own notes, and you'll be able to kind of understand and build a playbook out of these sessions as you kind of combine them throughout the other ones. So if you have missed some of our previous sessions, then they are on YouTube. You are able to go there and kind of watch through them, and we can provide you with the previous notes, welcome packages as well, if you want to continue building out that playbook. There's also the questions from, we have a form for submitting questions. So we do like to keep these sessions focused in on the topics that we're actually talking about during the session. And then if you have questions about an upcoming topic, we can certainly collect those through the form and then address them. And that's how we learned that a lot of people were asking about seeing and helping with reconciliation and understanding that a little bit better. And so that's kind of why we are going to, take this and leverage those notes to be able to produce something that is more valuable to you. Because at the end of the day, your feedback is going to help drive these sessions. We really appreciate all the people that got involved in submitting questions and submitting feedback through our surveys at the end and whatnot. Really helps us to understand our audience better and be able to help you more through these sessions as we do them month over month. Now, I will say I am dealing with the flu today, so just bear with me if I have some, pauses and whatnot. And I'm going to try to get through my section pretty quickly, and then we'll go into Corey doing more of the focus on the actual product stuff. So just keep that in mind if it sounds like I'm sound weird or if I'm sniffing a little too much or something like that. But I'm gonna get off camera and everything as soon as I can. But yeah, the whole point of these are really focused on education. So the goal here is to be able to educate you, to be able to know what you can do within our software, but also know what you can do within this field in general. And there's a lot of different service providers we work with. Trust Synthesis is core focused on trust management in general. They work with many different companies across the space, helping with managing their trust accounts and making sure that they're balancing their trust accounts. I'm going to let Corey mainly talk about Trust Synthesis, but they are a really great vendor or partner of ours for focusing on the trust management components. But we do work with many partners. So if you're on this call and you're thinking, it's coming to the end of the year and I need to get to a point where I'm just hands off with this stuff, like feel free to reach out. We can put you in touch with the most appropriate person. If you have somebody that you work with already, we can also help and train them on that. So just going to jump ahead to the next slide here. And so, yeah, if you haven't been at our previous sessions, the whole background here is really around this series with Trust Synthesis that we've been doing. Really, the goal here is to educate, like I just said, and really want to be able to leverage the education that we provide to you to be able to empower you to do more with less time at the end of the day. Because I don't know that I've met a property manager out there that really got into this space specifically because they love the finance and accounting side of things. Typically, when I speak to property managers, they're talking about how they love working in real estate and how they love working with guests and how they love providing great experiences and stuff like that. But the education or the accounting and finance stuff becomes a bit of a chore for a lot of people, and they get a little, one of the things I've learned most over the last kind of year and a half or 2 years of working here is that there's a lot of confusion in this space in general. So we really want these to be able to help educate you and then empower you to do more so that you can elevate your experience within the short-term rental space and be able to do the stuff you enjoy more at the end of the day. So that's really the background here. Like I said, I'm not going to go too deep into this. A lot of you have been on the same sessions multiple times and you've heard this a few times now, but if you haven't, just remember there are recordings that I can send you and note packages that we can send out as well. Also, feel free to use the question and answer box within the webinar here. We are collecting these questions, and we'll answer any of the questions that are specific to this kind of topic at the end of the session. But as we kind of, bring all that stuff together, it's going to really help to provide, feedback as we pivot these sessions and make more and more of these available for you. So, we're now in November. November, we're focusing on kind of transaction management. We're actually going to take a break in December because most people are pretty busy at the beginning of December, and then at the end of December, it's a lot of people on holidays. So gives us time to kind of go back on the feedback we've received, revamp the sessions looking forward, and then come back in January with more content and more stuff for you to be able to learn. And we're going to kind of go more into bookings at that point. February, we'll talk more about expenses and really how you can deal with expenses through automation, rules, rule set based automation, receipt management with our mobile app, stuff along those lines. Really a core focus on expenses. It's a big topic in this industry. I think, people are really, I think that could be a very well attended session because people in general are trying to figure out ways to get more automation around their expenses and to understand how the expenses hit back to the trust side of the company and how they should deal with those types of, practices. March, we're going to go into more of an integration discussion. A lot of people in the space still use QuickBooks Online, or their CPAs use QuickBooks Online. So we do have a very in-depth integration with QuickBooks Online, but we're going to talk more just about integrations in general. It doesn't necessarily mean only about QuickBooks Online, but we'll talk through some of our different integrations and how you can leverage those to do more within clearing. April, we'll go into financial statements and just reporting in general. You probably have seen, if you're using the software, there's been a ton of updates through our reporting, and they just continue to come out. And that's really a core focus of what we want to provide to you. So April will be a good session, especially coming into the end of, people are starting to think about taxes a lot more in April, March, April, May. So that's going to be an important one. May, we'll go into tax considerations, where we'll not necessarily go into the details of every single little tax, because honestly, they're so vast. There's different taxes in every state. It's different, but really more around how you handle taxes. And then in June, we're going to talk about the complete kind of trust accounting overview again, and hopefully bring in some people that even if you've been on these sessions and you want to get involved, like bring in some people from the from our client base to help with those sessions if we can get to that point. Like I said, there is that welcome package. Just a reminder of that. Make sure you download it. That's a good place to keep your notes, and over time, it's really going to start to build out that playbook for you. And then lastly, make sure you're asking questions and engaging through our question box. It really helps us to guide the process of these webinars as we move forward. So I'm going to quickly just launch a poll. It is something that we also use to help us understand a little bit better who's attending these sessions and what they want to learn about. So please do fill that out. It does help us, and your participation is really valid, or is very appreciated, because we're really looking for guidance on, what kind of content you want and how we can provide better sessions for you. So as you kind of are going through and putting in your input for this form, we're going to jump ahead and kind of go through some brief introductions. I've already been speaking for a while. A lot of the people on this session are clients already, and they know me because I probably chatted to them in the past. But my name's Corey. I work with the growth side of the business here at Clearing. My background is more in technology and mechanical engineering and software as a service in general. But then I moved into the short-term rental space about 5 years ago, working more on the PMS side. And then I've kind of navigated into the trust accounting side and the financial side of it as well at this point in my career. So thanks for coming. Engage in the question and answer box. And then I'm going to pass over to Corey here to introduce herself, introduce Trust Synthesis, and to take it away on some of the next content pieces.
Hi, my name is Corey Lee. I own a trust accounting management company. We do really specialize in the triage, organizational, and operational strategy of companies' financials, and really also partnering with Clearing, as well as actually other bookkeepers now, to try and honestly create a cadence for short-term rental accounting. Like Corey said, I don't think many people get into this space and think, hey, I want to go organize trust funds. That's not what they want to do. But then you find out it's not as simple as it seems like it would be. And because there's a lack of information really surrounding how to operate best practices, there's been a lot of confusion and frustration surrounding trust accounting in the space. And that's something that Clearing, my company, and many other bookkeepers that partner with Clearing and are in this space are really trying to bring more awareness and surrounding around. So that's what this webinar is about, is really just kind of talking about best practices. Again, I want to preface, I'm not a CPA. There are great CPAs out there. If you are looking for specific financial advice on how you should handle and navigate your business from a legal or tax standpoint, that is going to be beyond the scope of what we offer. But we do advise that, everything we're going to advise you is going to be best overall practices. We won't get into the nitty-gritty or the granular of, the tax in your area, your county, your specific area. We will happily tell you that there are people out there that support that, such as like Avalera and other tax programs that can partner with you to get that information. So we're really here to help you navigate that. As a company, we offer that for triage in our company. We do operate mainly on clearing due to the fact that it is the only standalone trust accounting software in the space at this time that integrates with your bank account to allow you to have that clear company picture that we're really trying to bring into the space. So with that being said, we are going to talk today a little bit more about reconciliation, like Corey said, and try to elaborate a little bit more on how clearing can help with that reconciliation and the differences that we meant when we were talking about transactional values in this space.
All right, thank you, Corey. Yeah, so I think we'll probably just jump right into it now. I mean, you just met Corey in Trust Synthesis, so now we're going to just jump into more or less. But first off, I think we'll just start with like a background on where we've gotten to now, because we have had 2 sessions before this on trust accounting and bank account infrastructure in general. So maybe Corey, if you wanted to, could you just go through like a high level, what we talked about in the previous sessions and kind of the biggest takeaways from those 2 sessions?
Yeah, absolutely. So in our first 2 sessions, we really kind of broke down what trust accounting is, what the importance between operational funds versus trust account funds are, which mainly the operational account being where you spend most of your money to operate your business, and then your trust account being a depository account where your revenue and rents and advance deposits are held that belong to stakeholders, yourself, guests, tax municipalities, and homeowners included. We really spent a lot of time on the importance of maintaining separate accounts, each for that purpose, and it mitigates your risk in commingling funds, bad record keeping, accidentally overusing funds, which does sometimes happen in this space. Sadly, we talk to many people that are facing that and trying to work their way out of it. And that's really what we're here for. So we're not here to judge anybody or any practices, but what you don't know, you don't know. And so we've really been trying to educate on making sure that those funds are kept properly separated, that they should be in separate accounts, just not a matter of earmarking funds in the same account. It is very important to try to avoid commingling those funds. At the end of every month, having almost a net zero payout of that trust account, making sure that all stakeholders that are involved in that month's revenue are fully dispersed out. So essentially every dollar that comes into your trust account should be allocated to one of those 4 pays. And then at the end of the month, everybody should be paid out. Any debts that are owed to the trust account should be recovered either from a homeowner or yourself to the best of your ability. Depending on your trust, and then we talked secondarily, the next session, we talked about specific bank accounts, breaking those down, how some of our clients and best practice is usually the 2 accounts, trust accounts, operating accounts, but then sometimes people will go granular and have their taxes in a separate account to hold that, and also reserve accounts for owner reserves as well, setting those aside. Those are both secondary accounts that some people really keep that apart from their operational revenue or future funds because they're not associated with that. We also talked about how trust accounting and trust accounts have different jurisdictions and separate laws depending on where you're at. There are some states that require you to have a specific legal trust account, which is different than an account that you call a trust, that you treat like a trust. And so depending on where you're at, who navigates the laws regarding short-term rental accounting in your space, you may be required to have a broker on your account. You may be required to have different auditing reports that you turn in at the end of the month to the state. And really, we would encourage you to look into your own legal requirements per state. But as far as our best case advice, we're just going to go with the most restrictive, and that is making sure that you have a trust account, you're treating it like a trust, it's a net zero at the end of the month, and that you're not commingling. That's how we're always going to teach from. That's our teach from point, is the hardest to attain, right? You might have states that have no laws, and you might be in a place that doesn't have any regulation. That doesn't mean you won't ever. And that is a changing landscape that we are seeing evolve on a regular basis. There is more, a lot more talk around this. Even just being at the conference in the VRMA last month, you saw that this is a hot ticket item. It is something being discussed. It is something people are talking about. And honestly, this is the reputation of our industry. If you think about what we do, so we take revenue from guests for future bookings, and our reputation and our trust in them, right, is that when they pay us, we have their money for their stay. And so that is something that's really becoming more and more popular, because guests are wanting that protection, homeowners are wanting that protection, and companies are really wanting the peace of mind that they're operating the right way. So that's kind of what we talked about. And then we really did kind of get into that reconciliation process. And that's part of that transactional, and that really kind of introduced us to the transactional portion we're going to be in today. And we talked about the different types of reconciliation. So the main one was, we talked about reconciling your bank account against your bank transactions, which is going to make sure that you are accounting for any erroneous transactions that happened due to AI reading your receipt incorrectly, duplications because bank feed integrations happen, missing transactions because maybe it disconnected, and when it reconnected, it missed a couple pending authorizations. Lots of things can happen with a technological communication gap. And so it's really important at the end of every month to do a transactional reconciliation, which is going to be your bank versus your bank state, or your software versus your bank statement, to ensure that all transactions are present and accounted for. And then we also discussed a booking reconciliation to make sure that all of your revenue is accounted for before you're paying out any stakeholders, including yourself. You want to make sure that you actually have that guest's money and that it's been allocated appropriately, that no line items have changed. And we'll be discussing a little bit more about that today, as Corey said. So why transaction management matters, and we did touch this a little bit last time, but there are a lot of challenges in transaction management. And the main one being manual errors, right? Mismatched transactions. When you have software connected, and I mean, not to get too techy on you, but most software is built to make your life easier, but it is usually associated to reading data from a certain point. So an identifier might be a guest name, an identifier might be a booking number, an identifier might be an amount. And then with AI and advancing technologies, we also have reading receipts and images and PDFs, and being able to drop a PDF into something and have it read, and allocating a dollar amount and putting a line item inside your financial software. And these are all things that Clearing has, QuickBooks has, most of our PMSs are starting to integrate as well. With all of that, depending on the data that's being read, you can have errors. And so technology is only as good as we validate it. And we want to make sure that we're setting up those safeguards where the automated technology that you have that can make your life so much easier and save you so much time is still being validated for any of those issues. And that's why transaction management really at the end of the day matters. Taking time at the end of the month to compare your data with a secondary checkpoint is really going to ensure that you are having that accuracy. Now, also here on the second point, you're going to see the complexities of funds from OTAs. And everybody on this call that's ever managed an OTA, or any software person who's ever tried to gather data from an OTA or a PMS, you have so much information and how it comes through. You know, you might have a host fee that on your PMS shows up as a positive number. On another PMS might be a negative number. And if you're not setting your formulas up, if theirs aren't being coded correctly, sometimes in some PMSs, they'll give a different name to every single charge as it comes through. And so when you're filtering that into a technological solution for yourself, sometimes things fail. You might lose a transaction, you might end up with a void in your data. And if you're not having those safeguards and running those comparisons, then you could very well have errors in your system that you don't catch till later, or God forbid a homeowner catches later when running their own audits and comes back to you. And then you have to validate the data, and also then you're working from a position of defense of your data versus the confidence that it's correct. And that's the cost of inaccuracy. So there's compliance risks legally. So you file taxes for the wrong amounts, you send reports for the wrong amounts. Financial discrepancies can really impact your reports. The time cost, I actually don't see that Corey fully pointed here, but if I find an error and if an owner finds an error back a couple months, I now have to go reprocess through, and what is the extent of that error? And so if I've gotten behind on my reconciliations or behind on my end of month process, that allows me to have that confidence that things are correct. I now have twice as much time, and usually now you're running audits and you're still working your end month process. So something that's already time consuming is going to become much more time consuming if we don't put these safeguards in place. Then last but not least, like I said, and you see here, those tiny errors that we don't validate and catch, they raise questions in our homeowners' minds. They already, as we all know, have a lot of questions about every expense that shows up on their statement. Why are they paying us? Why did we have to invest in that? What was the cause? Defending our revenue and our line items is already something we're going to be doing in any owner relationship. Making a mistake and then trying to defend it usually comes at the cost of owners being more involved in the process, questioning more of our transactions, wanting to double check things, losing some faith in our decision in our software, and making us work harder for something that, you know, we already maybe had, which was earned trust. So transactions, when we connect bank accounts and credit card transactions, the transaction management, the funds will flow from the OTAs or your payment processor into your trust account. And then you also have transactions for expenses. So when you're trying to code your transactions and keeping track of your expenses, there are so many solutions. I'm going to start with expenses because deposits coming into our system, actually I'm not, I'm going to start with deposits. So deposits coming into our system, we're going to get money from Airbnb, Red Awning, Booking.com, many VRP, Ascent, Merchant Auth, you name it. Like money is coming in from so many places. Sometimes you still are putting check deposits in your bank account, and that can get cumbersome, right? So in your PMS, a payment is applied to a booking, 300, 400. What you get in your bank is usually less a processing fee, or that payout combined with other payouts, or that payout, you know, combined with those payouts plus a couple of refunds, maybe a reserve hold. And so when you start getting that money into your bank, it can get really confusing really fast when you're trying to figure out that deposit covered what reservations, especially if you're getting advanced deposits on Stripe and everything else in comparison to your arrival deposits from Airbnb, or maybe your payment processor is on arrival or booking. I know that we had a Marriott stay. They like to pay out a month in advance for a booking that's coming, but they have a really, and then depending on who you're getting money from, their payment portal that tells you what they were paying you for can be very confusing. My least favorite, to go look for data, I have to log into every property because they have a payout register per property. However, they combine property payouts. So they actually don't have a register that tells me I paid you $5,000. I have to log into each property and it says 1,000, 1,000, 1,000. There is no reporting in their system that will actually tell me how to match those up. And so that I'm going to pause here. You don't have a how does clearing help, but I am going to pause here to say clearing helps by integrating with a lot of these different OTAs and a lot of these payment processors, and helping you break up those payments in your bank account. So that transaction management is so much simpler with clearing on your side, due to the fact that it is going to integrate with your bank account, and it is going to integrate with your bookings, and it's going to get those unique identifiers and tell you that $5,000 payment belonged to these 4 reservations, because it is able to get that data where sometimes it would be incredibly manual for us to go pull that out. Pretty much a full-time job, to be honest. And so that is one way that clearing does help, and we'll touch a little bit about that on booking reconciliation. I'll show you guys what that looks like. But then the second part of transaction management is your credit card transactions and your operational expenses. And these are the things that you're purchasing in your company accounts or on your company cards that you then need to get onto an owner statement and make sure is recovered for you. So there's a lot of expense tracking software out there, and they all serve a lot of different features. Clearing also has expense management software inside of it. Whatever solution you are using for expense management, this is by and far probably the biggest pain point that I see, where companies don't have a solid process or system on making sure that expenses are allocated to companies, or the people who are out spending the money are really busy in the field, and by the time they get back to do receipt management, they may not necessarily know, or they've lost a receipt, or it hasn't made it back to the office. I see this all the time. Like I can't even tell you how many times I see this, where companies are just deciding, okay, put that supply to the business, put that supply to the business, because the last thing you want to do is bill something to a homeowner or a property that you can't justify what it actually was. And so companies end up eating a lot of their expenses because they don't always take the time to create practices around coding those expenses. While there are quite a few things that you can do to, figuring out what your income coming in can be time consuming if you're not utilizing a clearing solution, but there's places you can find that data if you need to. If you don't have an expense tracking solution, it is much harder 2-3 weeks later, depending on the size and scope of your company and how many properties you're managing or how you're doing it. Once you get behind on those expenses, you don't really have, unless you're using Amazon for everything, which some people do, but even then, if you're not writing inside the orders and things like that, or using an integration, you may not know where those expenses went. So that is definitely one of the big pain points. Let's go ahead all right, so and we're going to talk a little bit about, this is an expansion on last time, and we are going to utilize how clearing helps with this, because we have the ability to show that. So we have 2 different types of reconciliations that we do in clearing. Hey, Corey, I actually did get into that demo account, and I have a client that's willing to let me show theirs. Are you okay with that? Because I'd like to.
Yeah.
No, I'm actually, I do have my client's permission. I'm just going to let everybody know that, so you don't think that I would just go show off your data if we ever work together. But I just like to work with real data. I think it's just helpful for you guys to see what the functionality would look like in a real time situation. So give me just a second here, and I'm going to switch over, and I'm going to share my screen. I cannot share, Corey. There we go. Okay. So let's just see how this is going to work. Thanks for your patience, guys. Okay. I want entire stream. You told me this was going to be challenging, Corey. All right, I'm going to share this. I don't know if it'll let me switch back and forth between tabs, so you guys will have to let me know. So we're going to start with a booking reconciliation first, and how I would navigate this inside of clearing. So, and how you could navigate it, honestly, manually. I'll kind of verbally talk through that as well. But first, I want to check real quick. If I go like this, can you guys see my transactions, Corey? Did it switch to transactions for you? Beautiful. Okay. So since we're talking about transactions, I'm going to kind of start a little bit here on transactions. So when we talk about your revenue and how clearing can help and your expenses on a regular basis, you should have a cadence for making sure that you're going through your bank account and you're allocating those transactions, right? And so inside of clearing, we do link to your bank account. So it does pull those transactions inside your system. It also, as we discussed, it does connect with your integration with your payouts, and it will actually allocate that payment to the bookings in question. And new and wonderful, my favorite feature is it's also going to tell you if anything inside of that matching isn't attached to a register, to like if it's a refund or a resolution or something that's not getting attached directly to a booking. Now it's actually going to flag you. And so we're always working to make your life easier. This is just one of the newest ways, and it's my favorite. I've added it yesterday. But here we have expenses, right? So where is this expense? How can we allocate it? What can we do with it? So on a regular cadence, we should be associating these either to a booking, making sure they get in there, making sure that our revenue is matched up to our bookings. If we have something come through from Stripe, going and looking that up. If it's not attached to a booking, making sure that we find out why. Did we have a reserve fund? Did something come through? But getting on that regular cadence of transaction auditing first, that's always going to be your first stop. You can't reconcile a bank account and you can't reconcile a booking until you do this step first. Okay, so you have to make sure that everything is accounted for where it should be before you go move into the next step. So I just want to start with that. Any reconciliation you do in clearing or in your own system, always make sure you go through your bank transactions first, because making sure they're allocated and coded is the first step before you can go audit if they're in the right place. So start with your transactions. And then one of the things with a booking audit, so when I do a booking reconciliation at the end of any month, I'm going to be running the time span that I'm looking at. And I actually do this on a weekly basis for all of our accounts, just because running a whole month, if there's a problem, I don't want to find out a month after somebody left, if they were in the first week of the month, that maybe we didn't get our full payout. Or maybe there was an extra fee that came through, or maybe we had a resolution or a chargeback. And I don't want to know that at the end of the month and be scrambling to release stakeholder statements. So we do this cadence on a weekly basis for clients, and we encourage everybody to do it more frequently than the last hour when you're trying to get money across the line. So that is the one thing. So what we do is we're just looking. So clearing makes this pretty easy, because it's going to tell you like, hey, you have your money. If for some reason you have collected more, or if you've collected less, it's also going to tell you that. So clearing makes it a little bit easy here, and that's how we help. You should see all greens. If you're not seeing all greens, you need to investigate. So that's how clearing helps. But if you don't have clearing yet, and if you are just in your own system, I would encourage you to be going through your PMS, export your reservation list, or go run a booking list and look at all the bookings that are there. Make sure that there's a payment in the system, at least on the system in the PMS, that's not throwing you off. Make sure that you don't have any issues on a weekly basis. Instead of finding out that you have reservations unpaid for, refunds unsent, fees not applied. We see this too often servicing accounts where we're telling clients, hey, you added a pet fee on this reservation, but the money hasn't come in yet. So making sure that you have somebody that's tracking that and actually, checking on bookings a week before they arrive. You should have a payment on any non-OTA probably about a week before they arrive. Airbnb's also come out with a really awesome feature that'll tell you pending payments that are coming out. So you can actually open your earnings statement as well and see what's going to be coming. And if you're not seeing the next week getting paid, then you could maybe get proactive as well. If you're not currently in clearing, I would definitely suggest that you find a way to run a side-by-side to your bank and make sure. When we started utilizing clearing for our clients, one of the most surprising things that they were able to see is how many bookings had line item issues and how many extra fees were actually coming through. And it's usually a shock to almost everybody that I get into this system to realize how many things come up in a month that maybe aren't being updated in the PMS and maybe aren't being added or allocated the right way, and how many bookings at the end of the month maybe still have a portion of revenue due on them. And depending on what PMS you're using, if you're not on clearing, depends on, like, there are certain systems that won't put that money on an owner statement if it's unpaid, but there are many systems that will. And it usually depends on how you have it set up. So doing a booking reconciliation and making sure you have your money, making sure that you don't have any extra line items unaccounted for, is definitely the first step of making sure you have anything you need. So once you've run your transactions and your booking audits, before you close out your month end, we then would suggest you do a transaction reconciliation. And so so clearing offers a transaction reconciliation inside of our transaction tab. So I'm going to go ahead and just show you right here. So if you're inside your transactions tab in clearing, you can click on your menu option here and go to reconcile an account. And then it's going to pop up here and ask you, what account do you want to reconcile? And you'll choose one of your attached bank accounts, whatever account it is that you want to go through your charges. And so once you choose that account, this is information you're going to get from a bank statement. So I'm just going to run arbitrary information here because I'm not going to show you her bank statement, but I am going to go ahead here. You do your start date, your end date. Now, not all bank statements end the 1st to the 31st. So also be aware, especially if you're doing, I have bank accounts that end on the 27th, 15th, 16th. Some of them are based off the date you open the account. It would make sense in my perfect mind that we would always do the, we would always do that. Oh, sorry, 1 second. We would always do the 1st to the end of the month, but that's not the case. So please make sure that you're aware of that as well, because that could cause some frustration if you had it, like you go into your transactions and you code all the way through the 31st, and then you find out your bank statement runs to the 4th and you can't get the reconcile to go through. I've been doing this a long time and I still run it, like I'll go back and look at the date and be like, oh, okay. So you're gonna have your starting balance in your bank account. They're gonna give you that at the top of your statement. And then you're gonna have your ending balance on your bank account. They'll give you that usually at the bottom. And then they're gonna load all of your transactions inside of here so that you can see them. At this point, you're gonna go through your bank statement and you're going to choose your charges and make sure that they get put on your statement. So when you see them on your bank statement, you check them and it's going, you'll see the status is pending. Once you get to a reconciled amount, it'll go back to reconciled as well to let you know that you have gotten to that place of reconciliation. And this step can be tedious. I'm not gonna pull any punches. This is not my favorite process, especially if you are operating in a bank account that has 17, 18 pages of transactions. It can be a lot and it's easy to like overstep because you're like, of course it's there, it's integrated. That's not always true. And sometimes it's there twice, and sometimes it's there and you didn't want it to be there. We've caught duplicates, not specifically in clearing, but in QuickBooks a lot. Actually, I do catch duplicates. I catch erroneous transactions. I really catch it in QuickBooks. I've seen many P&Ls overinflated because of the way that their hook works with some banks and the way that they get their data from some banks, where it will pull through charges and place them in the holding account, but also push them through to the register because QuickBooks has the holding and the register. Clearing is a live account. We don't have the holding register, so I don't see as many of those errors, but I definitely see them in QuickBooks because of that. I also see them, like I said, because of AI reading, and QuickBooks is set up to not eliminate a charge, but to add more. So what they'll do is if there's a $3.33 charge and a $3.38 receipt, and they can't match them together because the picture was smudged or something, it will actually load an additional charge in your QuickBooks, because in QuickBooks's world, it's safer to add more than it is to say this should be excluded, which is the right move. But if you're not reconciling, then you have extra charges in your P&L and you are inflating your numbers to where maybe you're not doing as well. Maybe you're doing better than you thought you were because you have some duplicate charges in there. And so as you walk through a reconciliation, the other thing that's really nice here is if you catch anything you haven't categorized, or you get to see it here one last time, and clearing does allow you the opportunity to actually edit that within here. So does QuickBooks. You can edit a charge inside of a QuickBooks reconciliation as well. So you don't have to go all the way out and fix that charge. You can actually operate inside of the reconcile as needed if you're like, oh, that should be going here. But this step, and I'm not going to pull any punches, it does take a little bit of time, and it does in most systems. Some systems will auto reconcile for you. So, I mean, you can select them all and see if it matches up. And if it matches up and you have all your charges in there, you're good to go. QuickBooks will auto reconcile for you. It just likes to automatically choose all of your fees for you. The danger in that is if you have any reoccurring charges or charges that might be like the same amount, you sometimes will get the wrong ones chosen for you, and then that can sometimes mess with your dates. So I like to actually just reconcile my accounts. I think it's the safest way. And this is the last touch point. If this is the only thing you do to validate your transactions are correct, and at least then you know the data going into your books is correct. You have your money, you ran your transaction audits, you ran your booking reconciliations, and now you're closing your bank statement. So you know that all financial systems in your world agree with each other. There's a peace of mind associated with that.
And Corey, I just one question that kind of came up here is in regards to this is, do you have like a specific amount of time that you can actually go and get like a duplicate charge kind of reversed or anything like that? Or is there limitations on when you're going like catching these early, basically, meaning would that be something that could benefit you when you go and try to get those resolved?
Yeah, absolutely. So in the world of credit cards, if you happen to have an Amex, you are lucky. They have no time limit. So Amex will actually let you dispute a charge 10 years after you purchased it. I have dealt with a chargeback from Amex, and they are very consumer friendly. So if you have an Amex, and I'm not represented by them or anything, but if you do have them, they are very supportive of that. But other credit card providers, and your debit card is also set up by a credit card provider. So you'll notice on your debit card, you usually have a Visa or MasterCard logo. They do have windows of time, and it is usually somewhere between 4 to 12 weeks, sometimes up to 6 months if there's a fraud. So fraud is different than duplication, and duplication is sometimes harder to prove once it's posted. So just getting to that and getting to your bank right away is very good. And then of course, I also want to stress that sometimes it's not a real duplicate, right? It's just a technological error. You can just delete the transaction. But then sometimes it is absolutely, you've been charged twice. I've seen reoccurring, especially in property management companies, I see a lot of what are memberships that are signed up for twice or sometimes multiple times on different credit cards, without them even knowing that they had multiple accounts. So I see that a lot as well. So that's the other things, is that sometimes the charges would be there, right? You'd have 2 bank charges, 2 here. But if you're doing this, you're gonna be like, why do I have 2 there, right? So as a business owner, making sure that somebody is double checking that or knowing what your fees should be is also very important. Stop.
Awesome. Perfect. Let me share my screen again. This is always the tricky part once I unshare my screen and then reshare it, but give me a sec, I'll go out of full screen mode and then come back. Sharing the screen. All right. Awesome. Thank you for that, Corey. Appreciate it. Gonna now then just jump into a little topic around here, how clearing can help. Now, we're not going to go too much into this. I mean, if you wanted to get extra support within clearing around this in particular, I mean, we kind of just did, right? Like we went through a reconciliation of a booking and a bank account. We do have those expense management features and functionalities within there. I mean, there's some rule set automations that you can use within the rule sets on transactions and both on the bookings as well. But there also is a receipt upload capability. So if you aren't aware of that, I know that we did a session in the past and somebody was like, oh, wait, I didn't even know you had a mobile app now. And so that's, ties into the expense management tool. There's actually some ways to like configure the AI as well to make it a little bit easier to use. But those are some big things we'll talk about when we start talking more about expense management in general. But, having access to something that you can give your team access to so they can centralize all these receipts and do it at the point of purchase rather than waiting till the end of the month may work towards a better system for your team to be able to remember what they were buying at that point in time, because that's a common trouble we hear, or I hear when I'm having lots of these conversations, is that people they collect their receipts and they bring them to the office and they send them in by email, but then when they actually start dealing with them, it's the end of the month and they forget what a lot of that stuff was for, even if they've written on it which asset it was for, which category it should line up with. Sometimes it's still hard to remember exactly what that transaction was. And then, as Corey alluded to, and this is something that I learned, and like that challenge associated with, if you can't prove it to your owner, then are they going to start asking these questions specifically about like the trust associated with what you're charging them for? So these are really important topics. Of course, thank you, Corey, for bringing your insights into all that. And then we do connect to bank accounts and credit cards. I think that's a core thing of our software, and that's something that people use use to really get that a lot of the automation and the tie back between the actual reconciliations of the booking and the bank accounts. But most people on this call, I'd say, if not all, are either in a process of considering clearing or are using clearing. So, if you do have more questions about any of the core capabilities around reconciliations, I'm certainly happy to address them. You can follow up after the email or after the session, and I'll be able to address more of those questions. But I do see clearing or Corey, is there anything you want to add here? I mean, in general, this is just an overview slide to talk about the things that we're going to do from the perspective that you just talked about. So I think we covered most of it, but if you had anything else to say here, then certainly you can.
No, not specifically, just really the importance of, if you don't want to do it, then finding somebody who does and utilizing the tools and resources to do it accurately, is really just our core concept.
Thank you. Awesome. So let's go and see if there's any questions. I answered a few of them. Most of them are people wanting to chat with you, Corey, so that's exciting. But if there's any other questions, now would be a good time to ask them. We're a little ahead of time today. I mean, I think I probably went a little quicker through the beginning part than I normally would because I'm trying to get through the session without getting too sick. But appreciate everyone that did join. I do see a couple questions coming in. One says basically, this is I think we kind of alluded to this, but how often should I reconcile my bank accounts, or what's the gold standard kind of best practice for reconciliation? What do you see, Corey?
Monthly. So I would definitely be doing that whenever your statement closes out. I would be lying if I didn't say I don't ever get behind. I have gotten behind. Just full disclosure, if you get behind, just be prepared that you might have to make edits, like you might have to eat a charge that you didn't catch, or, you might be willing to charge your owner for something that happened the month prior. Like, just know that if you're not on top of it monthly, to have a plan for getting ahead of it. I definitely would never let it go further than quarterly. And I would absolutely make sure that right now we're in November. If you have not done this, now is the time to get caught up. Your books in the end of the year are coming, and they will come faster than you think they do. So if you have not done any of these things so far, I would probably make it a priority.
Thank you. Another question that came in is, can clearing split transactions? Is there any functionality for splitting a bulk utility payment across multiple properties and stuff along those lines?
Yeah, absolutely. So clearing, you can split any transaction that comes into the system. You can also, let's say it's an invoice that isn't going to come into your trust account and you don't have the connected account, you can also just add a charge into a journal entry account in order to split that. You absolutely can. So it has full splitting functionality, and actually they have an automated feature to where, if you put $1,000 in and you want to split it evenly 5 ways, it'll actually split it all the way for you. You don't even have to do any journal entry or amount entry. The only time you're going to have to do amount entry inside clearing is if you're splitting it unevenly. But yeah, it does have a lot of splitting capabilities.
Cool. Yeah. And I'll just add that there's, like you said, there's some of the rule sets can also be used to, create matches, but then on top of any match for the transaction, there's also the ability to put some automation towards the split. So if it's something that's happening every month and you want to do the exact same split every month, that's a good use case for something that could be more automated with the rule-based automations on transactions through our custom rules. The last question that I see here for now is, if my bank account balances don't match either clearing or QuickBooks reconciliation records, what steps would you take to identify the issue?
So when this happens, there usually has been or is an integration issue or an entry issue. And so I would identify what charges are not lining up, because you're going to know as you check by check. So you're either going to be missing charges from your software. Your software is going to have more or less charges than your bank statement has. I would identify what charges those are. And then you have a choice. You can add them to your system, or you can remove the erroneous ones from your system once you've identified why they're there. I'll give you an example. We actually, on a bank rec just recently, had a client that had sent a bunch of checks to a tax municipality and put a bunch of bills in their QuickBooks because they knew those checks were going to come. The checks never came out because the municipality lost the checks. But when you put a bill into QuickBooks, it shows up in your recs. So they weren't closing their recs because these bills hadn't come through. those should have been red flags. So 6 months later, they still hadn't come through. I came along, I asked the question and said, hey, what are these? They finally told me. I was like, well, why don't we call and find out why they're not clearing? Those are opportunities for you to find out a break in your system. So there's either a one-off situation where the technology didn't line up. You might have a process that's wrong. I had another client that said they were just going into QuickBooks and adding an expense every time they got a receipt from somebody, not realizing that the credit card was attached to their QuickBooks. So they were duplicating every charge and had no idea for over a year because they weren't doing reconciliations. I would encourage you to identify those and figure out if you have a software glitch, one time, a process issue, or if you have uncleared transactions and uncleared bills that maybe haven't been cashed that you need to reissue or figure out why they're not charging or paying for that.
Awesome. Thank you very much. So if there's no other questions, I think we'll go ahead here and kind of just introduce kind of the, I mean, I haven't put a date on this one yet because, and first and foremost, thank you so much, Corey, for all your insights. I mean, every time that you talk about this stuff, I'm learning stuff. I know that people on the calls, there's lots of really great feedback coming in from the stuff that you talk about. So thank you very much. But in terms of looking forward, I don't have a date on this run right now, and that's intentional. It's because, like I said at the beginning, the first 2 weeks of December, people are always very busy with their closing off their, their previous months and statements and all that kind of stuff. And then the following 2 weeks in December, typically there's a lot of holidays going on. So people are either getting ready for the holidays or they're, go traveling. It becomes a lot less likely for a lot of people to be able to attend a webinar. So we're looking into January for our next session. We're also really the follow-up in this session. If you've been on all the previous sessions, please, through the survey, just give us as much feedback as you possibly can, because with this larger gap, we do have the opportunity to really audit all that feedback a lot more and figure out what more we can do as we move through, booking reconcile, or as we move through the system. There's lots of stuff we could talk about on a booking, but then if we don't know specifically what people are struggling with, it's hard to really understand what to talk about. But it is going to revolve around bookings to some capacity. Again, I've left this very, very kind of general because it may change, so just be prepared for that. But we're not going anywhere. There is something that we'll be doing in January. We just want to make sure that everyone can come to these sessions and that they line up with timelines that work for property managers. So feedback will be very appreciated. And then in terms of, I just kind of said that, so I don't need to go into it again, but there will be a brief survey that gets sent out automatically at the end of the session. Please do take the time to go through it. It really does help us. And we appreciate you attending this one. We appreciate you attending the previous ones. And also, one more time, thank you very much, Corey, for being here today. Really appreciate all that you do. So great. Awesome. Everybody else, have a good rest of your day. And if we don't chat before the holidays, I hope everyone enjoys any holidays that they're celebrating.
Bye, y'all.